You know what they say, if you educate a woman, you educate a nation. So all you young girls out there, invest in your education because you are investing in our collective future. And while availing the best education is a dream that all of us wants to fulfill, it may happen that we may not have all the resources to do that. So then, education loans comes to our rescue. And remember, not all debts are bad debts. Education loans can help you gain knowledge, upskill, and increase potential earning. Hi, I'm Priya from Lxme, and today I'm going to be talking about education loans, what to keep in mind and how to go about it. So let's get started. Education loan is a loan that students apply to meet the financial requirements to complete their education and related expenses. So there are two types of education loans. Number one is the domestic education loan. So domestic education loan, as the name suggests, it's for students who wish to study in India. Their loan will be categorized under domestic education loan. Number two is the foreign education loan. It's a loan for students who wish to pursue the course of their desire in a foreign institution. So now you know what are the types of education loans. So if you're planning to apply for an education loan, there are certain things that you need to consider. So I'll give you a list of 8 things that you need to check before you apply for an education loan. Number 1 is check the credibility of the institute, the course offered and the career prospects. Number 2, keep realistic future salary expectations. It's very important to know what you are getting into and what will be the results of it, right? Number 3 is compare offers from different lenders in terms of the interest rates being offered by the bank or the NBFC and other charges implied by them. Number 4 is check the collateral requirement. Number 5, check the credit score of the guarantor. It's very important as credit score helps in determining the credit worthiness of the borrower. Number 6, evaluate your profile in terms of the loan application and plan your future EMI payments. Number 7, know about the tax benefits being offered. And number 8 is read all the terms and conditions of the loan mentioned in the loan agreement that you will be signing. There are 3 things that you must avoid, okay? Number 1 is opt for a course just because a loan is available. Number 2, opt just for the sake of getting a degree. Number 3 is apply for a very high loan amount and not planning your future EMI payments. These are the 3 things that you must avoid while selecting an education loan for yourself. So after this, if you plan to get an education loan, there are a few documents that you will be requiring to apply for the same. Number 1, KYC documents. Number 2, mark sheets of class 10th, 12th, graduation and the entrance exams. Admission letter, fee structure of the institute that you are applying to. Based on that, the banks will make the payments. Co-applicants' KYC details and the salary slips or the income tax returns. And other documents as requested by the bank. Moving forward, it's a very interesting part here. So all of us look for tax benefits, right? Whether it's our investments, insurances or loans. So education loans also comes with certain tax benefits. But before that, you need to understand a small concept about EMIs. EMI stands for equated monthly installments. It is a set payment that you make towards paying off your loans. And this EMI consists of 2 parts, okay? One is the principal repayment and the other is the interest repayment, okay? So every time you make an EMI payment towards your loan, a portion of it goes towards your interest repayment and the rest of it goes towards your principal repayment. So now if you have understood this, let's move on towards the tax benefits. Under Section 80E of the Income Tax Act, you will get a tax reduction on the interest paid on your education loans. So one thing that you need to remember is that there is no limit on the amount that you can claim as a tax reduction on the interest repayment towards your loan amount. Number 2 is you can claim this benefit for 8 years from the year you started your loan repayment or until the interest portion of your loan has been repaid. So whichever occurs first, that time period implies. But maximum is 8 years. And lastly, you don't get any tax benefits on the principal repayment. So this deduction under Section 80E of the Income Tax Act is available only on the interest repayment and not on the principal repayment. As discussed, you will have to repay your loans through EMIs, but when do you start making the EMI payments? The loan repayment period usually starts 6 to 12 months after completing your course or after you get a job, whichever occurs first. Different lenders provide different moratorium period to pay off your loans. Hold on, what is a moratorium period? Moratorium period is the period during which the borrowers does not have to make any repayments to the banks. It's like a repayment holiday which is applicable to education loans. Now comes a very interesting part. Everyone wants to pay off their loans sooner, right? Want to know how you can do that? There are two ways that you can pay off your loan sooner. One is the part payment and the other is the prepayment. So let's first discuss about part payment. In addition to the EMIs, applicants can make a lump sum payment at frequent intervals to repay their loans. This is called part payment. Sounds confusing? Let me explain this to you with an example. Suppose your EMI comes to around 50,000 per month, and after making all the payments and your investments and everything keeping aside, you are left with some surplus amount of money, let's say 1 lakh rupees. So if you wish to pay this 1 lakh rupees towards repaying your loans, then this 1 lakh rupees will be deducted directly from your principal outstanding balance. So this is called part payment. Next thing that we need to do is the second option that we can opt for is the prepayment, or also known as the foreclosure. It's for those who wish to pay off their loans in one go. So let's understand this with an example. Suppose you took a loan of 35 lakhs. After making payments for a certain number of years, you are left with an outstanding balance of 10 lakh rupees. If you have certain surplus funds with you and if you wish to pay this 10 lakh rupees in one go and close the loan, this will be called as prepayment or foreclosure of the loan. So depending upon which one you choose, you can pay off your loan sooner and can save up on a lot of interest costs for yourself. Or for young girls who wish to study in the next few years, you can plan for your education or for your child's education by investing your money the right way. For example, mutual funds can be an option for you. You can choose from a variety of portfolios and can start investing with as little as rupees 100. So that's it from me, guys. If you'd like to know more about education loans or want me to cover any other financial instruments, do drop your suggestions in the comment section below. For more videos on women and investing, subscribe to the Lxme channel, and to start your investing journey, download the Lxme app. Thank you.